welfare, foreign wars, National Endowment for the Arts, the war on drugs. So it turns out it's so easy to talk about taxes in America because no one minds having their money taken away from them and spent on things they didn't ask for. This is the Talk Better Project, but a special episode. Part 2 of this series was going to be the facts of the Republican tax plan in Congress. But it's really hard to explain that without explaining tax plans in general. So that's what this is, progressive tax plans, what they are and how they work. Hi internets, I'm Ross. So it turns out it's super hard to talk about tax reform in the United States. So this episode is only about progressive income tax and tax deductions in general. And I promise, next month's episode won't be so action-packed and exciting. Progressive income taxes! So in episode 1, we talked about how some people want to apply a single even tax to everyone, while others are more interested in taxing people with more property more. What we're talking about today falls more into that second group. In episodes 3 and 4, we'll be talking about the values and politics behind taxing people different amounts. But what we're doing today is just explaining progressive income taxes, which are designed to take more money from people who earn more and less money from people who earn less. The easiest way for us to explain all this is to go to a make-believe country with much simpler rules than the United States. So today we're going to Countryland. Conveniently for us, Countryland citizens' incomes are divided between $500 a year and $1,500 a year. Countryland's tax agency starts by imagining the whole range of possible incomes and splitting them into different brackets or levels. As your income progresses through each level, it gets taxed the corresponding amount. Tax level 1, $0 through $500 a year at 10%. Tax level 2, $501 through $1,000 at 15%. Tax level 3, $1,001 and on up at 25%. An easy way to get confused about progressive taxes is to think that just because you're in a certain tax level means all of your income gets taxed at that level. So say Joe makes $1,000 a year. 15% of $1,000 is $150, but that's not what Joe pays in taxes. Or Sam makes $2,000 a year. 25% of $2,000 is $500. But that isn't what Sam pays in taxes. Here's why. It doesn't matter how much you end up making. If your income progresses through a certain bracket, the income within and only within that bracket gets taxed that much. Clear as mud, right? Let's look at examples. Tax level 1. Every person who progresses through $0 through $500 a year pays 10% on that first $0 through $500, the maximum of which would be $50. So let's just say everyone in Countryland makes at least $500 a year. So who in Countryland pays that first $50 in taxes? Everyone. Every citizen's first $500 in income is taxed at 10%. Let's go to tax level 2, where tax is 15%. What happens when someone makes $1,000 a year? Do we take their income and charge 15%? So now they pay $150? No. They already paid taxes on their first $500. In progressive systems, income that was already taxed doesn't get taxed again. So only that second $500 in income gets taxed 15%. Every citizen's second $500 in income is taxed the same. That's $500 at 15%, $75. So if you make $1,000 or less, your taxes are maxed at $125. If you make more, $125 gets added to your running total. Now, there's a common misconception I want to make sure we get clear. To do so, we'll go into tax level 3. Now, let's say last year, Max paid $125 in taxes on $1,000 of income. But Max realizes that next year, they're making $1,001, pushing them into tax level 3. Max does some quick math and is horrified. 25% of $1,001 is $250.25. Last year's taxes, $125. This year, $250.25. The penalty for making one extra dollar will be $125.25 extra dollars in taxes. Thanks, Obama. This is a very common misconception, and it is wrong. Only the $1 over $1,000 gets charged at 25%. It's not the total amount of income at 25%, it's only what's within that bracket at 25%. Max's tax bill will be $125.25. This is a common misconception because tax levels can be confusing. Thanks, Obama. So someone who makes $1,500, they subtract the $1,000 that already got taxed at $125 and apply 25% to what's left, $500. $125 plus $125 is $250. If their entire $1,500 had been taxed at 25%, it would have been $375. This is probably a good time to mention that I got my degree in political science because we want to be called scientists, we just don't want to have to do math. So Countryland's budget is probably terribly balanced. The point is simply that the US has a progressive income tax, and right now there are 7 different income levels, and different levels for individuals, married couples, and corporations. See? I told you this would be fun. Something else to talk about with progressive income tax and tax brackets is tax deductions. And let's talk about that after a word from our sponsors. Hi, it's Ross. I don't have a sponsor, but I did want to ask a favor. Would you please consider sharing this video with someone else? I'm still a new channel, and the machines that run YouTube and Facebook really like it when videos are shared by users themselves. So if you share it with someone, it'll help new people find the channel on their own. Thanks. See you around. All right, now we were going to talk about tax deductions. A tax deduction lowers how much income the government thinks you made. And there can be a few different reasons for doing this. So let's say the tax agency does some math and decides that it costs about $400 a year just to be alive in Countryland, between things like food and housing and other necessities. It's not like the people have that money to spare. That $400 practically disappears before they can even spend it. So Countryland decides to allow every citizen to deduct $400 from their annual income. Now, it doesn't mean they pay $400 less in taxes. It means that what gets taxed is reduced by $400. Deductions can also help encourage certain behavior. So let's say Countryland wants its citizens to own their own homes. Well, if you allow citizens to deduct from their income the amount that they pay on their home loans, they can help nudge citizens to take out those loans. Let's go back to some examples. Tax level 1. Someone makes $500 a year. The tax bill before deductions is $50. Their income is reduced by $400 for $100 of taxable income. They pay $10 in taxes. Tax level 2. Someone makes $1,000 a year. Tax bill before deductions is $125. Total income is $1,000. Take away $400 of personal deduction, $600 of taxable income. The first $500 is still taxed at 10% for $50. The next $100 is taxed at 15% for $15. The total, $65. Savings because of a $400 tax deduction, $60. The deduction comes right off the top of your income, so the amount in the highest tax level is what gets reduced. Last example, tax level 3. Homeowner making $1,500 a year. The tax bill before deductions is $250. Their personal deduction is $400. Interest paid on home loan deduction, $150. Their taxable income is now $950. Their taxes come to $50 and $67.50 for a total of $117.50. This taxpayer ends up saving half of what they would have paid thanks to deductions. Deductions can mean a lot of money in taxes, but most times it's money that people have already spent that the government is excusing or that the government wants to encourage more of. So if you're talking about individuals, you're obviously going to want to save money through deductions. But if you're looking at the economy as a whole, your objective is going to be to look for ways to improve growth through deductions. Here in the US, paying off your student loans or your home loan can be deducted from your income, as can investing in your own business, or hospital bills, or income taxes paid at the state and local level, as well as a lot of other things. Countryland's tax code is somewhat easy, but most experts agree that the US tax code is perhaps best described as a hopeless hellscape nightmare of insane complexity next to which Jackson Pollock seems quaint and understandable. Okay, those might be my words, but the fact is taxes are complicated. And this is just meant to be sort of a primer. I am not a financial advisor. I am not offering financial advice. Tax codes are very complex, but so are the feelings and values behind them. If you haven't watched episode 1 where we kind of touched on where some of those feelings and values come from, go watch that one. In coming episodes, we'll be talking about the history and politics behind income taxes in America. And if you liked this one, stay tuned and please share. Thanks. See you around. Next time on the Talk Better Project, we'll actually cover some of the facts and details of the Republicans' tax plan, Tax Cuts, and Jobs Act. It is best compared to a hopeless hellscape nightmare, a hellishly complex nightmare of complexity that a hopeless, helpless, hellish nightmare, complex nightmare. Most taxperts, yes, taxperts, hopeless hellscape nightmare of complexity. Hopeless hellscape nightmare of complexity.